All right, guys, we are here today. We got jobless claims unemployment. Honestly, the market's down pretty big overnight. Look at the Q, all the way down to 495s, man. The correction continues here. And it's one of those weird situations where the correction continues here. It's one of those weird situations where, you know, like I was able to kind of predict this correction a little bit, and I'm not trying to brag. I'm in a weird spot where I'm kind of flat in most of my investments. I ended up cutting a lot of them. I thought we were up too much, and we made money last year, and we're up this year, I believe, as well. I'll have to check though. But we ended up liquidating most of our investments last year ahead of this, and the reason we did was because we told people, hey, the market's up 105% in 2 years. The AI boom happened. It's up ridiculously large percentages. I think eventually we're going to correct sometime this year. And yeah, this is what we're doing now, where we are effectively in a correction now. A lot of tech is down. Taking a look at everything here. Again, look how brutal the Q is. Q is down to 490s at some points. Hit 487s. It's at 495s now. Today we got jobless claims unemployment, and then we also have payroll data coming out on Friday. But so far, like, you kind of see the market's rejecting this trend line here around 502s or so. So, yeah. We got jobless claims unemployment filings in about an hour and 10 minutes. All right, let's talk about some news. As of today, markets are down, influenced by the trade tensions and corporate earnings reports. S&P is down, Dow Jones is down, NASDAQ Composites down. We got jobless claims unemployment filings scheduled for 8:30 this morning. It's going to provide some insights into the health of the labor market. We got non-farm payrolls releasing tomorrow at 8:30. We're going to cover that like we always do. Yeah. The president confirmed the implementation of 25% tariffs on imports from Canada and Mexico. This escalation has heightened investor concerns about potential trade wars contributing to market volatility. Treasury yield curve has steepened ahead of jobs, reflecting investor anticipation. We had Marvel Technology down 15.5% in pre-market. That's one of the reasons look at Marvel. Down a very large percentage. Down from 90s down to 75, so a very large percentage here. They forecast that but did not exceed analyst expectations, raised concerns about slowing AI infrastructure and demand. We had JD.com shares surged on strong earnings, reflecting robust performance in the e-commerce sector. We had Zscaler up 4.5%. So yeah, that is what we got going on right now. All right, here's the timer. That's the timer. Again, Broadcom, I'm looking at Broadcom, it's down. Microsoft's down. VIX is up. Tesla down. Netflix down. What's up, Sam, Peggy, Built, Beach Bum? Hey, what's up, man? Volk, Fabio, ER, Anto, NYC, Ava, Stifler, Rex, Crypto, Big Picture, Fabio. Are yields up or down? Let me look. Bond yields. So bond yields are up over the last 2 days. which is weird because these follow interest rates, and that means interest rates are going to be higher. Weird. Yeah, I don't know. I gotta wait for the economic report to show up. We got jobless claims unemployment expected at 235,000, releasing at 8:30 in about an hour. So we gotta wait for that. Yeah. Yeah, we gotta wait for this. Why the dump overnight? I'm not sure. Let me see if I can look up more information. I think it's just political stuff going on. Numbers are going to be bad, but that could be good. People realize tax cuts for 3 specific auto manufacturers doesn't really mean growth for tech. Yeah. What's up, Radical? Bro, GPT is so freaking slow, dude. Like, bro, I swear it literally freezes. Way too easy. Like, it literally freezes out the whole computer for a second. Alright, so yeah, so the significant drop in the U.S. stock market can be attributed to a combination of factors, 3 different things. Alright, first one is trade tensions. Recent decision to grant a 1-month exemption on 25% tariffs for Mexico and Canada automobile imports. Concerns about the ongoing trade disputes, particularly with China, continue to weigh heavily on investor sentiment. Potential for escalating trade wars has heightened fears of economic stagnation and inflation. Corporate earnings, Marvel Tech down big. Failed to impress investors, down over 15%. You can see that on the left side. Over here on the left side is Marvel Tech. You can kind of see it's down pretty significantly here. It's at a ripple effect, causing declines in like Broadcom, AMD, Nvidia's down to 114s, looking weak. So, yeah, Marvel pushing everything else down. Again, $74 a share now. Nvidia down, following it. AMD is down. Like if we take a look at other microchip stocks, AMD is down. AMD's under $100. Microsoft's down, you know. So, MU down. Supermicro down. So VIX is up. If we take a look at the VIX, which is a volatility index, it's up, which means that fear. All right, guys. Yeah, so I'm kind of digging a little bit deeper to see what else we got. All right, guys. So, yeah. I'm looking at the chat. Hey, what's up, Fran? High volume. Market open, probably retracement up. Yeah, I mean, that's how it goes. I don't think we have any other economic data today. You know, we got the trade deficit data, which I think is relevant too with all the tariff news coming out. We got trade deficit data coming out, non-farm productivity, wholesale inventory, some Fed speakers. Tomorrow is the busiest day of the week for sure, though. Tomorrow we got Jerome Powell speaking. We got non-farm payrolls. We got unemployment report. So tomorrow's pretty busy. Yesterday's services honestly influenced the market a lot more than expected here. Oh, we also have the ECB interest rate decision in 45 minutes. So the ECB makes their decision in 45 minutes as well, which is going to, I don't know how much it's going to influence things. They are expecting a 25 basis point cut down to 2.5% from 2.75%. So they're expecting a 25 basis point cut for the ECB. We'll see what they do. We also have challenger job cuts that drop in about 2 minutes. So we'll cover all this stuff, to be honest. I don't think a lot of it is going to move markets outside of jobless claims. Like jobless claims is probably going to move stuff. But yeah, we'll see. All right, let me do a poll. John, I'll be honest, I'm tempted to get SPY December 2027 leaps and call it a year. I mean, you know, with leap options like that, there's a chance that, I mean, obviously you'll probably make money with leap options. The problem, though, is that, okay, if you get unlucky, you might not. But I guess with leap options, the risk is limited anyway in that way. So, like, I'm cold in here, bro. Like, it is cold on my end. Like, I'm genuinely cold. Let's do a poll. Yeah, I think I would rather wait and take leap options as we're like really weak. Like I'd rather wait to see how weak we are before I buy leap options. Dark J, you should do a poll. Are you a 12-year-old child or not? You know, hilarious joke, bro. Great one. You know. Yeah, so I'm gonna do a poll right now. Does the market rebound? Or does your son have any more plays? He kind of was right, to be honest. He was right. He said we'd bounce back and then come back down, and that's what we did. Does the market rebound, or does this correction continue over the next 30 days? Is the poll. You know, John, I remember you calling this pullback in the market a few months ago already. Yeah, I mean, I was right. I tried telling, you know, like, honestly, it's something that I'm actually, this hat's a little bit too small. My head, I think I got a just big head, to be honest. My head's too large. I'm too smart is what I'm saying. But no, I'm very proud of being able to call this correction because I absolutely called this. You know, and this is at a time where people call me a perma bull and you know, they're telling me the market's going to crash every other week, you know. And again, usually I shame them. But in December, I told you guys, like, I thought we would correct pretty big. I thought we would, you know, I stopped buying up stuff. I unloaded a lot of my positions, and I told people over and over again, hey, I think we might correct sometime within the next year. We need to be honest. Like, we're up 105% on the nasdaq. It's just too much. And so it feels good, man. It feels good because I was right about it. You gotta celebrate your wins sometimes in trading, and I was definitely correct about this so far. At this point in time, I don't know whether I should start buying up yet. I think if we dip anymore, I might start to DCA over a longer period of time, but it's gonna be a longer term strategy. People didn't want to believe you. Yeah, I mean, it's kind of one of those things when I tell people the market doesn't have to crash or correct, people get mad at me. When I'm, whenever I think we're extended on the upside enough and we have enough geopolitical and macroeconomic stuff going on that where we might correct, people make fun of me for that too. And so, but we've been accurate. We were accurate with it. We were right. Now, we'll see what happens. Like at this point, we're just a correction. 10% is just a correction, right? I mean, it's a correction, but it's just a correction. It's not a crash. It's not anything yet deeper than that. And generally, to be fair, the market corrects at least once a year. And so, but to be honest, I need a little bit steeper drops. I think there's a big chance that we might bounce back already, to be honest. Again, I think there's a chance we might start to rebound back up. But I also think there's a chance that we keep going down as well. I know if we do keep going down and we drop another 10%, 15% especially, that's when I'm going to start being interested in like DCAing into stuff over a longer period of time. It also depends on how spread out it is, right? So it also depends on how spread out it is. If this bear market lasts for a long period of time, the longer it lasts, the more likely the more interested I am into adding into it. But I'm going to wait for now. Am I low? Is my mic low? Am I really? Is the music too loud? Let me know. After seeing yesterday's tariff delay the market we go for any reason right now, it's getting pretty desperate. Yeah. Yeah. I mean, again, it's one of those things where the market is never going to go straight up. Like, we always need pullbacks, and pullbacks are healthy. But at the very least, I'll probably start to add some small stuff here on this dip, just in case. And then, it's going to be small, though. And then if we keep dropping, I'm just going to keep DCAing into it over a longer period of time, probably. But I'd prefer to see larger pullbacks, to be honest. But again, like the market's not going to go straight up. Like one of the reasons I thought we would correct is because, again, I've said this before, but like there's a mania you see. If you know what a mania, do you know what I mean by mania? What I mean is that like people are they're just not really looking at things in a healthy way, right? They think everything's going to go up. Like I've talked to a couple different people that asked me for tips on investing, like people that I know in my family and stuff. And some of them have said essentially that it's impossible for the market to correct. It's impossible for the market to crash. Like all these IPOs or some stuff are happening. And I remember telling them like the market can always correct. Like you're wrong. Like the market can always correct. It's possible. We can correct. And like even in the most successful tech revolutions in history have been some of the most likely situations in which the market might correct. Like if you look at 2000, internet was that next big thing. We had like a deep mania of runs for internet stocks in the late 90s. And then 2001 hit and we corrected, had one of the longest bear markets in history after that. And so corrections are always possible. And sometimes after these big, crazy runs in tech revolutions, do we get some of the longest, biggest corrections. And so it's not a shocking thing to see at least a small correction here. And again, we'll see how deeper it goes. Yeah, jobless numbers are always important. I made almost 1,100 in my Top Step account yesterday. All right, guys. AI tech still 5-10 years away from delivering me a pizza, so AI needs a correction for sure. Bro, I think AI could probably deliver you a pizza right now. You know, AI could certainly talk to they could talk to Domino's right now and order you a pizza and have it sent to you. So, would you like to suggest some money management on that firm? No. I don't suggest any money management. You mean risk management? I put out a short yesterday talking about it. Look at NVIDIA breakdown. So NVIDIA under 14s now. It's down to 1350. And again, the way I did this yesterday, if I put up Top Step X here, like the way I did it yesterday is very simple. I talk about this risk strategy a lot. It's a perfect beginner risk strategy. Super simple. I'll show you guys the trade breakdown here. I'll show you guys the breakdown. Yeah, see, this is really cool too. So check this out. So check this out. So here's the funded account we made it on yesterday. And again, so you can see we start with small size in this account, right? And so we talked about this in our video yesterday too. So like, look, we talked about this in our video yesterday. So like, check it out. So so we make about, what is this, like 160, 150, 160, 150 bucks. And then once we do that, we start to take larger size. So we build up a small cushion here. And so you can kind of see me build up that small cushion. At this point, prior to this trade, we had made about $250 in profit leading into this trade, right? And then once we do that, then we scale our size up. And, you know, once we do that, we scale our size up. So you see we can go from being up like 160 to this profit taking, we made about 250. This one we made about 250. This one we made about 250. This one we made about 100. And so then we make like another 600 in there. And so we go from being up 250, 190, 145, 160, 260, 512, 840s, and then max up there at 1074 cumulative profit. And so, yeah, that's how we did it. Made sense. And so again, it's that simple risk management system where you build up a small cushion first. Once you build up a small cushion, you take larger size. If you get another green trade then with larger size, you should be up like $300, $400, $500 or whatever it is. And then if you want to afterwards, depending on what your goal is, you could take an even larger risk. And that's what I did. And that's how we ended up 1,100 yesterday. You love to see it. We'll take it. Good risk management system. I don't take a shower in the morning before I stream, Tony. I get up 5:30 East, 5:30 Central Time. I'm just not about to get up and shower that early, bro. It's too early for that, man. But again, I don't even claim to be good. I don't even claim to be anything. I'm not an investment professional. I'm not liable if you lose. Always make your own assessment. Trade responsibly, guys. I have no freaking idea what I'm talking about. Might be wildly wrong about anything and everything I say. Don't copy me. I'm not an investment professional. I'm not liable if you lose money. I have no freaking idea what I'm talking about. Don't copy me. Some of these links that I post are affiliate links, of course. If you want to check out Top Step, I'll put this link up. Great way to help support your boy here in this channel. We appreciate the love. But yeah, some of these links are affiliate links. I'm going to put Top Step up. Top Step's just a great way to learn how to day trade, right? And you can use this risk management system on there to get funded and then use it with your funded account. So Top Step gives you a 50K demo If you can make 3K without losing 2K, following their rules and conditions and everything, they fund you 50K with a 90% split. And they pay out millions. They funded millions of dollars. They paid out almost 200 million in withdrawals since 2020. They fund thousands of traders. So it's just a great way to learn. And it's the best of both worlds. It's limited risk. It's $50 basically, $49 a month for the base one. You can also pay for a more expensive one like $100 or $150 if you want a larger funded account if you pass it. And if you fail, you're out $49 for the base one. It's not the end of the world. But if you pass it, you get a 90% split. You get to keep your first 10K. And so it's very similar to funding your own account. It's the best of both worlds in that situation. And then if you use my link and go to Top Step X, there's zero commission. And so, you can even more so use small size with micro contracts with zero commission. In the futures market, I can day trade basically the SPY and Q price action in the NASDAQ and the S&P E-mini. Small size, I can trade micro E-mini, so like mini SPYs and mini Qs. So it's just really useful. And again, most day traders fail, and that's the same regardless of where they go, including anywhere. And so most day traders lose. You have to understand that. It's a lot cheaper to lose here than it is to fund your own account thousands of dollars and lose that. Let's be honest here. Most of the time, at least. But again, I can't guarantee anything. You want to confirm it all with them. Here's the link if you want to check it out. They are an affiliate of mine. I am biased because I get paid by them. Top 3 most biased person of all time. All right, guys. Sorry, I was talking to my wife. Oh yeah, we got the ECB rate decision coming out in like 30 minutes, right? We got the ECB decision coming out in 30 minutes. Jobless claims. Yeah, so jobless claims unemployment filings is how many people are filing for unemployment week to week. I don't even claim to be good. I'm top 3 worst ever. Don't copy me. Also, if you want to give me a follow on x.com, I'll put this link up. Give me a follow on x.com. We post a daily video on finance and everything going on. If you want to, like, if you're on x.com and you want like a thorough breakdown of everything going on in finance, we do this twice a day. We try to do it twice a day. We do it once in the morning, once at night. We're about to post our next one right now. There's the link right there. Give me a follow. Yeah, and we're gonna post it right now. Yeah, so all right, guys. Yeah, so again, if you want to, here's our, we just did the post that we always do here. We just did the first one. We'll get another one going. I traded cafes in this morning right before the London Open. I was shorting the NASDAQ, but my chair broke and it threw me off. I think tariffs and corrections correlate together. Yeah, I mean, they're obviously correlated with this one for sure. Like this correction that we're seeing right now is from tariffs. Yeah, so this correction is from tariffs. Nothing better than the taste of fresh fear to start the day. Yeah. Yeah, I saw you just follow me, Keith. Appreciate it. Hey John, what's the latest news on this pullback this morning? So this pullback is mostly due to fear being ignited from tariffs, as well as like Marvel Technology. If you look at the left side here, they posted earnings. Their earnings weren't bad. They mostly came in flat as expected, but the market wanted more. It's kind of like Nvidia earnings, right? Like the market wanted more from Nvidia earnings, even though Nvidia BDPS beat revenue, the market wanted a little bit more. And so instead, you know, the market negatively reacted to it. The market just wanted a little bit more than what we got here, you know. 10% correction already happened. We'll bounce back now. Yeah, that's possible. All right, chat. Kevin, are you forgetting? Where's Intel at? Did Intel? I know Intel was on a bounce back too. Here's Intel right here. It's all the way back down to $20 a share, man. A lot of stuff just seems heavy right now, to be honest, bro. A lot of stuff just feels heavy, I think, right now. Where's the link, bud? Link for what? A lot of stocks in buy zones for me. Yeah, well, stuff's down a lot for sure. There are no winners in a trade war. Yeah, for sure. I mean, the only winner in this is U.S. manufacturing. Challenger layoffs came in at 172K. They were previously 50K roughly. So Challenger layoffs did happen. They showed up at 172. Last time they showed up at 50. So Challenger job cuts for February came in much higher than last time. And this is it provides the information on announced corporate layoffs by industry and region. It's an indicator of investors to determine the strength of the labor market. So this was much higher than expected. So again, more weakness. I'm wondering if the rate expectations are going to change. So the Challenger job cut showed weakness in the labor market again. Honestly, guys, what I'm expecting for tomorrow is lower payroll numbers, to be honest. I might be wrong, though. like I'm trying to predict it, but I'm expecting lower payroll numbers. And again, still 93% likelihood that we're gonna pause next week. So never trade fundamental, but that's the only time I have such a strong conviction on physical gold. Where's gold at right now? I know it was at all-time highs. Now it's at 2907s. Yeah, guys. Last thing we got is tomorrow. We got Powell, 12:30. Yeah, so Challenger layoff showed larger. Yeah, so Powell set to speak 11:30 Central, 12:30 Eastern. And again, payroll numbers, I'm looking at this. Payroll numbers expected at 159,000 tomorrow. That's pretty low. Again, well, this payroll report is becoming more and more important. Yeah, I mean, let's not be too super political here, guys. Like, it's too political. I don't know. I think the market's gone back to bad and good is good in terms of its reaction to economic reports. I think the market now fears some economic weakness. You know. So I think the market kind of fears economic weakness now. And so I think if we get negative payroll numbers, like weaker payroll numbers, the market's going to go down. Not up. I think they fear economic weakness, but I might be wrong. I have no idea what the market's going to do. There's always variance with this type of stuff. So again, I genuinely don't know. I just think we probably get economic weakness fears from investors and traders alike. Now, what do you guys think the market fears more? Weakness? What do you guys think the market fears more? A weak economy or high inflation? Inflation or recession fears is higher. I think the market obviously feels a little bit of both, but I never understood like what motivates these type of people. Like, I'm watching this video of these rich neighbors getting into a fight, and I'm just curious, like, one of these guys looks like he's on TRT, and then the other guy is like the nerdiest like dad guy ever. He's got glasses on, he's got khakis and a collared shirt, he's old, you know, and he's like going start stuff on this guy's property. He's like confronting him. It's like, bro, the TRT dad's gonna win. Oh, well. Okay, well, actually, the TRT dad kind of started it. The other guy was trying to get away. Neither of them are very good, but do I watch WWE now? I used to watch it. Anyways, let me ask. So I asked people, what do people fear more, inflation or recession? People think the market feels inflation more. I think the market, I think it pivots back and forth. Right now, I think the market fears recession, economic weakness a little bit more. I think that's what I see the most right now. But again, it also could certainly be the other side of it. Like, the market could certainly fear The market could certainly fear inflation more. It fears both. Yeah, I think the market certainly fears both, right? But what does it fear more? Stagflation, recession, and inflation. Yeah, I mean, that might be true too. TRT dad did win, to be honest. Like, the other dad got beat up. Labor market data is positive. Trade deficit and inventory decline growing point. Have they revised GDP forecast downward? Let me see what we're looking at. I know next week we got CPI, which is big. PPI, CPI next week. We got JOLTS. So next week's actually very busy too, economics-wise. So yeah, next week we got CPI. What about the week afterwards? I'm looking for the next GDP report. I know we just had GDP last week, right? And it came in at 2.3%. Okay, so I'm looking at some of the stuff. So Tuesday, nothing. Retail sales Monday, Wednesday, Thursday, Philly Fed, Friday. Yeah, GDP must have been last week, so we still got a couple weeks. It came in at what, 2.3%, right? So not bad. Nerdy dad won in court off camera. He probably did. Do you know what? You must know which one I'm talking about. All right, so I did a poll here. We asked, does the market fear... Or no, we did a poll, does the market rebound or does this correction continue over the next 30 days? 58% think the correction continues over the next 30 days. 42% think we bounce back from here. And again, look at the challenger layoffs here. So this number, again, is a predictor of labor market. It showed up at 172. Last time it showed up at 50K, so I just posted it in the chat right now. Again, challenger job cuts came in a little bit hot. Oh, we got the ECB decision showing up pretty soon here. Let me get ready for this. Yeah, the ECB decision. Yeah, so we also have the ECB decision in 15 minutes exactly at 8:15 market time. We also have import-export prices and the trade balance data, which again, with the looming tariff fears, the trade balance data might actually be a little bit more relevant than it usually is. Usually it's pretty insignificant. It's nothing. But with the looming tariff fears and everything going on, the trade balance, import-export data might be relevant as well. We'll have to wait and see. Again, we're going to cover it like we always do, but yeah, we'll see what we get. All right, chats. Man. You know, one of the worst things I see on social media now is I see like an artificially generated, like I saw one of like a lamb. It was like a lamb. And the lamb's smiling and it looks all sweet and kind and cute and everything like that. And you got like a bunch of old people that are just like, oh, what a sweet lamb, you know, and then they'll hit you with some like sob story. They'll be like, this lamb was saved from the slaughterhouse yesterday, you know, Can I get a like for this lamb? And all the old people in there are like, oh, what a great lamb. I'm sitting there like, that lamb isn't real. Becky, come on now. Like, this lamb is not real. Like, they got you. They got you. They got their like. You know, that's all they want is their like. That's what they got. Come on now. There's so much AI generated stuff, you know, or you'll see the ones where it's like, part of it's kind of ironic, or part of it's kind of sarcastic, I think, too. But you'll see the other ones where people are like, this is Steve. You know, he just celebrated his 110th birthday. Can we get a like for Steve? And Steve's got 6 fingers, apparently. And so that's super common right now. Kroger posted earnings just now. So Kroger posted adjusted EPS of 114. They expected 110. Revenue of 34.4. Expected 34.27. Higher than expected EPS and revenue. Some of the comments are fake. Some of them are not, though. Some of them are real. And usually the AI comments people point out. People will go to the comments and be like, hey, you're a bot. All right, so Kroger. Personally, like, I'm in Texas, which is a Kroger. Kroger thrives in Texas. I don't shop at Kroger as much because Kroger is kind of expensive compared to everything else. You know? Like, the stuff there is just a little bit more expensive than everywhere else we go. Like you go to Walmart, it's cheaper. You can go to like all the other stores here, it's cheaper. But Kroger's they tax a little bit. Yeah, that's right, Pawn. Yeah, somebody said soon these live streams will be AI, but I think people like me are gonna grow more because of that. Like, I think you're gonna get so much saturation of AI generated content and people online that the real people sitting here spending their time doing this are going to be even much more valued in that way, right? I think we're going to be even more valued because we're actually real people versus AI people, you know. But what I do think is going to happen is going to be a lot harder to tell who's real versus not. I think that's going to be much more difficult. So definitely top 3 shoppers ever. My wife's one of those top 3 shoppers ever, bro. She goes to the store, she spends, you know. Like, my dad was always kind of like frugal, and so I would get stressed out going to the store. If I tried to get the name brand Cheerios, I'd get in trouble, you know. And so when I go to the store with my wife's just kind of throwing stuff in there. And like, even though we have money, like, it's not like I'm broke. Like, we have money to pay for it. But it just makes me stressed, to be honest, going to the grocery store. I hate the grocery store anyway, though. For whatever reason, I just dislike the grocery store. CPI is next week. It comes in at... Yeah, so last week we had GDP show up at 2.3%, which was lower than the previous estimates of the last quarter. Next week we got CPI on Wednesday, PPI on Thursday. We got JOLTS job openings on Tuesday. Friday we got Michigan consumer sentiment and inflation expectations. So almost every day next week we got some stuff to do. All right, guys, let's get ready. We got 24 minutes. 24 minutes. Wait, are you real? Of course I'm real. You know, I used to do a joke on the stream. You guys might remember me if you watched the channel for long enough. I used to do a joke, and the joke was that I'm not real. I'm an AI-generated person. And I joked about it like, ha, ha, ha. But now, at this point in time, we're getting to a point in which that is actually, like, feasible to do that, you know. So I can't really joke about it anymore because then people might actually believe me at this point in time because AI people have gotten so good. John, we have seen every time that there is a data drop and your wife interrupts and you're like, baby, I got a drop. I got a data release. I'm on stream with a change of tone. Yeah. Yeah. I mean, that's how it goes. AI will hire real people. HEB is not more. It's less. Yeah, so the ECB rate decision's in about 7 minutes. 7 minutes. They're expecting a 25 basis point cut from 2.7, from 2.75 to 2.5 is what they're expecting. We'll see what they do it. The dead internet theory is a little scary, to be honest. Like somebody, yeah. What's scary about it is I think it's actually kind of plausible. I'm not saying I agree with it. I think it depends on where you look, right? You're always gonna have bots somewhere, but I think it depends on where you look. How do you balance not taking market frustrations out on your family? Something I'm struggling with. You got to disconnect yourself from all of it, man. You know, like I could make money, lose money. I'm not gonna be mad at my wife or kids for it. You know, like I've completely separated myself from it. I also kind of balance my life where I'm not looking at markets caring about anything going on in the evening unless something big's going on. So like I'm just kind of separating that from myself. You know, do you believe Nvidia will come back? Maybe, possible. AI is too much hype and not much juice. Dude, AI is super. I mean, I disagree. I think there's a lot of AI hype. But I think AI is justifiably like a technology revolution. I think AI is the future. It's obvious that it's going to replace a lot of different things. Like, I'll put it this way. I use AI so much in my regular business. Like when I run this business on YouTube, dude, I use AI extensively. I use it to write things for me. I use it to query things, look up things, explain things, break things down. Like I use it for every facet of my life right now. I use AI. I use it for medical questions. I ask AI different medical questions about different vitamins and supplements and medications and like all this different stuff. I use it for if I have a rash on my arm, I describe the rash on my arm and AI will populate what it thinks it is, and I can, you know what I mean? Like I use AI so much right now, and it has completely taken over any other form of research that I've done for the most part. Now, there's still some things that I have to research organically now, but it's different. And so not only that, but from a programming perspective, and this is an argument I've been giving, again, before AI took off, I told people, absolutely, anybody that has been really watching the stream a long time, I told people that AI wasn't, people would tell me it was a buzzword, it was a gimmick, basically. And I told them they were wrong. And this was before the big runs in AI, and then AI ended up going crazy. NVIDIA ended up going crazy. And I think from a programming perspective, you got to look at it like this. Programmers used to have to write lines and lines and lines and lines of code. At this point in time, you can tell like a good AI system, hey, write me a function that does XYZ, write me a conditional statement that does XYZ, write me a React component, that does this, and this, and then make it interact with this and do all this different stuff. Write me an API lookup feature on this, application, and it'll write it. And it'll write it well at this point in time, and that's only going to get better. You got to think about how much better AI is going to get in the next 5 years, right? Like that's when it really becomes very clear AI is going to take over the world, and it already kind of has. But think about how much better it's going to get in 5 years. It's going to get better for sure. And it's going to get way better in 5 years. And that's going to take over the freaking world. Let's be honest. Yeah, I can now have AI write me things in programming that would take me freaking hours before. Hours and tons of research. AI will do it in freaking 5 minutes. Yeah, numbers. So again, we're waiting on the ECB rate decision. I want to see how this is going to affect stocks and markets. I'm going to put like the SPY. I'm going to put gold, and then we'll put the VIX up. Let's see what the ECB does here. Again, SPY's right at the lows again. Let's see what we get. Yeah, and again, the thing people have to understand, it's only going to get better. When you mix AI with like quantum computing, like dude, it is going to get very good, very, very, very fast. Like it's going to get very good, very, very fast, and that's what you have to understand. It's not about what it is now, which is already changing the world. It's about what it looks like in 5, 10, 15 years. It's going to be scary, scary good. All right, guys. So again, we got the ECB, European Central Bank rate decision, going live in 2 minutes exactly. 2 minutes exactly. We got jobless claims unemployment filings going live in 17 minutes. Here we go. Let's wait. Let's see what we get. I mean, it's pretty expected that they're going to cut rates 25 basis points from 2.75 to 2.5%. We'll see what they actually do, but that's what they're expected to do. Cut it down to 2.5%. Later on this morning, in about 20 minutes, we got jobless claims, non-farm productivity, import-export, and trade balance data going live. All very relevant, very important. All right, guys, we got less than a minute here. Chat, less than a minute. All right, 45 seconds until the ECB rate decision. I don't think this is going to move markets. Rate decisions are pretty expected. The outcome's already pretty much determined. And so unless they shock people and cut 50 basis points or pause outside of what's expected, the outcome is pretty predetermined. What's up, Jonathan? Yeah, well, quantum's too fragile right now. And quantum computing is super interesting. All right, here we go. We'll talk about it after this. All right, here we go. And there it is. Let's see if we get any movement here. Yeah, as expected, 2.5. Cut from 275 to 2.5%. So 25 basis point cut for the ECB, European Central Bank, as expected. Market's moving a little bit, but not much. Gold's not really moving a little bit either. As expected, pretty much flat. VIX is going down some. But yeah, quantum computing basically, and again, I'm going to simplify it. When I simplify it like this, some people are like, "Nuh-uh, bro, that's not what it means." But I'm simplifying it in a way people can understand. So ECB statement, they did say something. Let me put this up in chat. The ECB statement, they said rates cut 25 as expected. Monetary policy is becoming meaningfully less restrictive. Let's take a look at bond yields. Come on, I hate making this populate, bro. Give me the bond yields. Come on now. Okay, yep, we got it. Come on now. Okay. Google. Hello. There he goes. Sheesh. All right, it's not open yet. All right. Everyone started rate cuts before us. Well, I mean, it depends on when you consider us starting rate cuts. We really started cutting rates in August and September of last year. So we cut rates 3 times. Over 3 meetings, we cut rates a full percentage point, and then we paused last meeting, and then we're pausing next meeting as well. And then after that, we're expected to cut again. So we're kind of taking a little break from cutting, but we already started cutting late last year. All right, guys. In Australia, we only just cut rates for the first time. Yeah. All right, chat. Hey, we got 13 minutes left. 13 minutes. But yeah, quantum computing is basically, so your computer does things in order. Your computer does things in order, but it does it so quickly that it seems simultaneous to us when really, like, it's just doing it in order, right? But it's processing it so quickly that it seems like instantly to us. Quantum computers have a state that they call superposition. This essentially allows them to process things more simultaneously, which causes them to be able to process things so much faster and solve complex algorithms and problems in a much more quick way, right? So quantum mechanics, they process information fundamentally different than regular computers. Traditional computers use bits, which is zeros and ones, to store and process data. Quantum computers use qubits, which is called quantum bits, which can exist in what's called a superposition of both 0 and 1 at the same time, again, simultaneously. This enables them to perform calculations exponentially faster than classical machines. The problems with quantum, though: early stages requires extremely low temperatures, and it's just unstable, right? Like the conditions that you need to keep these computers, they're super fragile. They're unstable. Lots of error rates, scalability problems, and all that stuff. But it looks like quantum computing is the future. It looks like that way. We don't know for sure yet. At this point in time, it looks like quantum is the future of technology. But at the same time, you know, technology is weird in that things can sprout up that completely change this forecast. And so you never freaking know. Yeah, the easiest way to explain it, though, like I said, Mac, is the easiest way to explain it is just to explain it like regular computer processes. Like, it processes things, you know, do this, do this, do this, do this. Quantum basically allows them to process things simultaneously in a way, right? Which makes it much, much faster because it doesn't have to go in order. It doesn't have to, yeah. What's making the VIX jump so much? I mean, the ECB rate decision came out. That's probably what this is. You know, market not liking it. Challenger job cuts. Freaking the market out. All right, so here's what happened. So the ECB forecast, they cut 2025 and 2026 GDP. They raised headline 25 inflation, but lowered 25 core inflation. So this is what happened. Here's at the ECB, and they cut 2025 and 2026 GDP, so they think a weaker economy is coming out, and they raised headline inflation. I can already hear the stagflation comments starting here. But again, ECB cut 25 and 26 GDP. They raised headline 25 inflation, lowered 25 core inflation forecast. Yeah, well, there's implications. Right now, Kevin, you know, the quantum is not going to mine Bitcoin. It's just not feasible for it to. In the future, maybe, right? It's a different thing. In the future, it might not make any impact of it. But maybe, again, it's one of the reasons people are really... Because, okay, let's theorize some things here. Let's put out some... Let's speculate on the future. I think it's very possible that one day, deeper into the future, maybe in 5-10 years, we get something like quantum that can solve crypto algorithms much, much faster in mining than we can currently do it, right? And if that happens, in theory, it could render Bitcoin and a lot of other mineable proof of work cryptocurrencies more obsolete in price, right? Does that make sense? Like, if we have something that can mine crypto much faster and easier, supply and demand might push the price down for Bitcoin. I tend to think Bitcoin's going to go up regardless because there's a finite amount of coins that can be mined regardless of how fast you can mine them. And so this might not actually end up playing out this way, but it's an interesting thought to consider. All right, guys, we got 8 minutes. John, how possible do you think it is that the Fed turns hawkish? Hawkish would mean restrictive, which means pushing for high interest rates. I doubt the Fed is going to be more hawkish than they already are. I think the Fed's already hawkish right now. I think anytime the Fed doesn't cut rates, it's a more hawkish action. Payrolls, right? Like, so the only way the Fed would be more hawkish, which is restrictive, would be if payrolls showed up like really, really hot, right? Like if payrolls on Friday shows super hot, if next week CPI inflation shows high numbers, that's a situation in which the Fed might be more hawkish, right? Like if inflation spikes basically and payrolls show a super strong labor market panicking the markets, that's a situation where people might freak out. But nobody freaking knows, man. We'll have to wait and see. Yeah, y'all are right. So Bitcoin does have a fail-safe for this specific thing. So it's probably pretty safe. And again, I think the finite nature of Bitcoin, regardless of how fast you can mine them, is going to mean it's probably pretty safeguarded from stuff like that. Bro, bring back Hansen versus Predator, bro. Bring back To Catch a Predator, dude. That's the greatest show of all time. Like, dude, I love watching that show, dude. It's genuinely entertaining. Like, bring that show back. Honestly, at this point in time, you got a lot of like, you got a bunch of like people doing it anyway. They're doing it. They just don't have, what's his name? You ever notice that people that are like that, they kind of have like a look to them, right? Like people that are like that, they kind of have like a look to them. Supercomputers could just query all private keys with corresponding balances. Yeah, maybe. Do you know why you're here? Oh, you're talking about a quote. We can't get rid of inflation without recession. That's how economy works. Well, I mean, we can't really, like, okay, if we look at CPI, right? Inflation's not really going to go down. Even if we enter a recession, it's not like we're going to get any type of significant dent to it. Like, here's the last 25 years, or here's the last 20 years. The only time we've got a significant dent to inflation is the 2008 recession. You know, that's the only time we actually dented inflation, but it didn't stay that way. Eventually, it popped right back up. And so we're not really going to make prices go down and stay there. Like, inflation's always going to increase. Prices are always going to go up, right? Like, when we say inflation goes down, most of the time what we're referring to is inflation slowing down, meaning like the prices of things are rising at a slower pace than they previously were. If we could, the Fed's target for this is 2%. So if we can keep inflation to only go 2% higher every year, that's a win by the Fed in the Fed's mind, and that's what their goal is anyway. Nasdaq's gonna drop. Microsoft will have all-time gains. Yeah, maybe. I mean, they own ChatGPT, so Microsoft's one of those stocks that I'm thinking about investing in because they're under 400s right now. They've got a big pullback. Microsoft. Let's see what they're down percentage-wise. They're down from 468s down to they hit 380s at one point. So, percentage-wise, Microsoft's down almost 20%. Or at least it was. It's at 401 right now. So technically, at this point in time, Microsoft's at 15% decrease. Still significant. All right, chat. Hey, we got 3 minutes left. Chat, 3 minutes left. Hit the live button next to the play button. Let's get ready. We got 3 minutes. Let's do this. Jobless claims, unemployment filings coming live soon, chat. We had the ECB rate decision. We got jobless claims going live very soon. Let's do this. I'm ready. We got a little bit over 2 minutes left. My poll is a little bit early, by the way, guys. A little bit early. We got import exports, non-farm productivity, trade balance data, and jobless claims, unemployment filings. Again, jobless claims are expected at 235K, right around there. All right, chat, we got 2 minutes. 2 minutes. This timer's a little bit off. Gold's bouncing back. Here's the SPY, and here's the VIX. Yeah, I mean, I always just describe it as Microsoft owning GPT, or at least a point, like a chunk of it. All right, guys, a minute and a half left. Minute and a half left. Yeah, we also have GTC. We got NVIDIA's GTC conference coming live this month, too. So we got NVIDIA's GTC. We got the Fed rate decision. We got CPI next week. It's a whole bunch of stuff going on that we got to cover. All right, guys, here we go. Give me your last minute predictions here. We got 1 minute left, chat. 1 minute left. Give me your last minute predictions here. What do you guys think is going to happen? Markets are pretty down today. Tomorrow we got payrolls. Less than a minute. $45 seconds. Again, this is how many people are filing for unemployment week to week. About 30 seconds. 30 seconds. Drop, drop, bounce, drop. What number do you think jobless claims are going to show up as? All right, guys, 20 seconds. Sentiment is down, so you think we're going to rip? Plausible, I guess. All right, chat. All right, chat. All right, timer's a little bit early. Timer's a little bit early. Hey, buddy, I'm sorry. Here, wait. You got to wait about 20 seconds. Hey, still come in here, but here. All right, guys, 5 seconds. 5, 4, 3. You can watch it if you want, buddy. 2, 1, and there's jobless claims numbers. Let's watch the market's reaction here. Jobless claims ended up showing 221, lower than expected jobless claims, showing a stronger economic situation than expected. Less people filing for unemployment. We showed up at 221 versus 234 expected. My son's over here brushing his teeth. Trade balance data showed negative 131, which means that we are importing much more than we're exporting by a greater margin. And the market has reacted somewhat positively to this jobless claims report. We got about 2,000 people watching right now. Jobless claims, again, 221 versus 234 expected. 221 versus 234 expected. All right, buddy. Hey, I love you. Here, did you just swallow your toothpaste? Bro, that's terrible for you. Don't swallow your toothpaste, bro. Here, it's all right. I love you, buddy. Have a good day at school, bud. All right. Love you, man. All right, guys. Again, 221 versus 234 expected for jobless claims numbers. Love you, buddy. So jobless claims showed up at 221 versus 234 expected. Less people filing for unemployment. This actually shows a stronger economy than expected here. I'll put this data up on screen. But again, this does show a somewhat stronger economy than expected. Here's the data right there on screen now. Last jobless claims were 242, showing a much weaker labor market. This one showed a much stronger labor market at 221 versus 234 expected. So this was lower than last time and lower than expected. So, yeah, SPY up to 576s. It's reacting positively to this. And I told you guys, I think the market is back to good is good and bad is bad. I might be off with this, but I think the market's back to wanting economic growth because of the economic weakness signs that we've seen in the economy over the last couple minutes, last couple weeks. I think... Yeah, I think the market wants economic strength because they fear economic weakness because of all the stuff going on, the big pullbacks, the big catalysts in the market, tariffs, all that stuff. Yeah, that kid might run this channel one day, guys. So I always try to teach them a little bit about stuff going on. Again, if you haven't already, check out Top Step. Great way to learn how to day trade. Most day traders lose, right? Yesterday we had this beautiful, lovely $1,100 win yesterday in futures. We did make about $1,100 yesterday, chat. $1,100. If you take a look at this here, this was my trades yesterday. And the way we did this is very simple. We built up a small cushion on Top Step. And this is how you pass some of these challenges, too. I can't guarantee anything. They're an affiliate of mine, so I'm biased, okay? Always understand that first and foremost. They're an affiliate of mine. I am biased. The way I pass these and build up profit once I'm funded, Top Step gives you a 50K demo. If you can make 3K in profit in futures without losing 2K first, following their rules and conditions, they fund you 50K with a 90% split, and they pay out millions. They paid out almost 200 million since 2020. They fund thousands of traders. They've been around for 12 years plus, and they fund thousands of traders. And so they give you a demo. If you fail, you're out $50. You can then trade their practice account with real-time data and learn. Great way to learn how to day trade. It's kind of the best of both worlds. It's limited risk. If you fail the base one, you're out $49. If you pass it, you get a 50K funded account with a 90% split. Just really useful, right? And again, the way I build up this profit in futures, which is I can day trade the SPY basically in the Q price action. I can't trade the SPY directly. I can trade the E-mini, which is what the SPY tracks, and the NASDAQ, which is what the Q tracks. But again, so I built up this small cushion. If you look at the small cushion, we talked about this earlier. Oh man, what went on there? I built up this small cushion. All right, this is going to be a little bit harder. All right, so I built up this small cushion here, guys. So look, 95, 20, and 37. About $160 in profit first. You can kind of see we started off really small right here. And we built up that cushion. Once we did that, we took larger size. We started to increase our sizing here. And so you can see that's when we started making 95, 225, built up even more until eventually we made about 1074 on the day net. So we made about $1,100 net yesterday on Top Step. And that's how you do it. You build up a small cushion. You use that small cushion to take larger size, larger risks. Once you do that, you can take even larger risks if you want. And if you fail, you're back to break even. That's how you do it. And again, no PDT in futures. On Top Step X, there's zero commission, so I can take micro contracts and trade very small and steady. And it just makes sense, guys. It just makes sense. If you want to check them out, here's the link. I'll put it up in chat. I'm not an investment professional. I'm not liable if you lose. I have no freaking idea what I'm talking about. I might be wildly wrong about anything and everything I say. Do not copy me. Understand CFTC 4.41. Hypothetical or simulated performance have limitations, guys. There's the link. If you want to check it out, thank you, Dan, for becoming a member, bro. I appreciate it. Shout out to Dan for becoming a member. I think we got a donation earlier, too. Hey, thank you, Adam. What do you think of I don't know much about that stock, brother, to be honest. I'm not really a big investor in penny stocks as well. The long-term chart looks horrible for BBAI. Look, here's BBAI. Here's the long-term chart. This thing looks terrible. Looks like pump and dump penny stock central here. Here, let me get this out the way. Looks like pump and dump penny stock central. Pump, dump, pump, dump, pump, dump, pump, dump. It just looks like pump and dump nonsense. It looks terrible. I appreciate the donation, though. Thank you, sir. Shout out to Dan for becoming a member. Yeah, I mean, again, this showed a stronger economy, a stronger labor market than expected for jobless claims. Let's get ready to trade. Let's trade. Trade. All right, so here is the beautiful account that we made. 1,100 on yesterday. Let me get myself out the way here. There we go. Look at these gains right here. Look at that. You'd love to see it. Hey, thank you for the $10, Dan. I appreciate it, brother. Thank you. Yeah, I'm not sure. Again, they're an affiliate of mine. I'm biased because I get paid by them, so naturally I'm biased. All right, so we got this big rebound here. The VIX is going noticeably down in this report. If we get a pullback, I might buy it up just to see if we get a rebound, but I need a dip to do so. I don't know. You got to check with them about whether it works there. Yeah, it's a bot. I mean, it's going to miss things, you know. All right, so I wanted to pull back. I never really got it. We're going to trade small because it kind of goes against our rules to trade large right now. You know? So it kind of goes against our rules to trade large in this thing, but hey. All right, so there's a little dip here. I'm going to buy this, and we're going to take 2 contracts. It's a little early, so we're taking very small size. Take 2 contracts here. See if we get a pop up. We're in 2 contracts. We might add up to 3 maybe. There we go. Took half off. Again, we're just trading pretty small. There we go. Hey, there we go. We made about $30. I'll take it. Not a bad little trade. We bought this little support level that we have on the chart here. And it worked. So far so good there, green. Oh, sorry, Pawn. I didn't even open Discord yet, brother. Sorry, dude. Yeah, people are worried about recessions. Abercrombie and Fitch. Where's Abercrombie and Fitch right now, dude? I know, yeah, so at least they pulled back some. Abercrombie and Fitch had one of the most crazy runs I've ever seen. And the problem with this stock is that nobody's ever in there. Every time, like, Abercrombie and Fitch was big when I was young, right? Like, it was super preppy, and I remember wearing them because I wanted to get, you know. All the girls liked Abercrombie and Fitch when I was young, you know. So, like, they liked all the preppy kid, you know, shaggy hair preppy kid. And that's kind of what I whatever they wanted, bro. I would wear a pink bunny suit at the time if I thought they were into it. And they might have been, but no. So Abercrombie and Fitch was big. I go into Abercrombie and Fitch recently. Nobody's ever in there. Nobody's ever buying anything from them. And they've got some crazy clothes, bro. They've got like mesh see-through t-shirts for men and like all kind of stuff. I'm not judging. Listen, I'm not judging. But I can't imagine their sales are very good, you know. And, you know, I remember saying this when Abercrombie and Fitch was at like $200 a share last year. It was nonsensical. It doesn't make any sense to me from that perspective, like for them to be up that much. And again, since then, it's not a shock to see they've dropped like 50% back down to where they should be. Maybe they probably should be a little bit less than this, to be honest. But hey, all right, guys. You were right about Palantir dropping. I was right about everything. That's all I'm saying. Right about. Listen, I'm definitely like one of the most humble people around. Definitely right about everything that I've said in the last couple weeks. Palantir, I was right about Palantir's drop too. Palantir, again, a lot of these moves can get really culty, you know. And what I mean by that is, if you say anything that if I say, hey, I don't like Palantir's 600 PE ratio, people start spewing hate messages, right? Like, you never want to be in that situation, chat, in which somebody's speaking like genuine speculation, like negative speculation. I'm trying to think of the best words. People speaking genuinely. Man, I don't know. I'm drawing a blank right now. For whatever reason, I just can't think. Genuine constructive criticism regarding a stock is what I was trying to say. I don't know why I couldn't think of it. You don't want to ever get in a situation where genuine constructive criticism regarding a specific stock, or just like the factual metrics behind a stock, like their PE ratio or whatever, causes you to spew hate at somebody. You really don't. If you are in that situation where you're buying a stock and anytime somebody speaks somewhat negatively of the stock, you're just lashing out, attacking them, you're probably in like a really cultish pump and dump stock. You know, and the only communities that really do that are communities that are trying to trick rookie investors into sitting on wildly depreciating assets, right? Because Apple doesn't need to talk you into holding it. Microsoft doesn't need to talk you into holding it. Amazon doesn't need to talk you into holding it. Other stocks might need to, and again, that's a bad sign if they do. Bad sign. Although I do like Palantir, and I think Palantir is probably going to go up over time. The PE ratio is a little bit too much, though. You could pick a stock from a hat and it dropped. Yeah, well, no, to be honest, I told people I thought the market was going to correct. Definitely the greatest mind in finance right now. But no, I did tell people I thought the market was going to correct in December, and we did. Hey, there's a bunch of bad ones. There was Mullen. There was, AMC got kind of toxic for a little bit. They have the blessings of they're allowed to have a high PE, but 600 is crazy. Yeah, I mean, a high PE ratio, it can be okay. But when it starts to... Again, what happened with Palantir is very simple. We had momentum. I'm going to buy this dip now, too. It's kind of weak, I know. And again, it's a little risky, but we already got a cushion on the day. And so we'll trade with the cushion we have. See if we get a little pop. Don't do it. Don't you do it. It did it, chat. It did it. I'm going to double my size. See if we get a retracement back up. Oh, I'm dumb. I shouldn't do it. Hey. Woo. All right, we got out. Somehow we ended up surviving there. Hey, we did end up making $40 from that trade. Hey, you love to see it. Okay, cool. We ended up... We're up about 60 on the day now. All right, look, my hands are off. I can't. I shouldn't be trading like this. I shouldn't. Yeah, but what happened with Palantir is very simple. Which is that Palantir, let's put it up on the bottom right chart. Palantir had some momentum. And so Palantir rode the momentum wave, and that's what people profited from. So if we look at like a 4-hour chart, Palantir rode this big wave of momentum. So that's where people made a bunch of money, and people justifiably made a bunch of money. But eventually that wave has to end. And then the more people that start to sell on these downward pushes, the more people get nervous and sell. And so it snowballs, a kind of domino-like snowball effect where people start to get nervous, they sell. Other people see them selling and they get nervous and they sell. And people see them selling and getting nervous and they sell too. And that's kind of where this big, massive percentage correction happened. But I still think Palantir is probably a good stock. I'm not an investment professional, though. Don't copy me. You should trade a practice account in pre-market. I feel like people would get mad at me if I did. I'm not going to do that. Yeah, AMC, I mean, it's a company. It's just not a successful one right now. The movie industry, and again, I've gotten to a point where I don't even cover AMC earnings anymore. AMC used to be one of the biggest earnings calls. Like, what really grew my channel in the beginning was GameStop. So me and maybe like 5 other people covered GameStop and the craziness that happened from GameStop. Like me and maybe 5 other people. We covered the short squeeze. I was in it. And I mean, there was more people covering it, but there was like me, 5 other people, and then Roaring Kitty was obviously the big guy covering it. But that's what grew my channel. So we went from having a couple hundred people to thousands watching those streams. And yeah, eventually, at a time where like GameStop had this big community around it, like GameStop had this big community around it, and was doing good and all that stuff. But eventually, people just started realizing that like there's no fundamentals behind it. Like AMC, there's no fundamentals. GameStop, maybe. GameStop's got a chance. AMC doesn't have any fundamentals. And so that's the problem, is that they're just struggling in that regard. Yeah, it was me and a couple other ones. I mean, we had I'm not even acting like I was the biggest one, but it certainly helped grow my channel at the time. And again, so that's what I'm saying. So now to see it where like AMC's not even getting any views anymore, you know, you can kind of see that whole movement go away. And again, I was very critical, guys. Like, I remember telling people, like, look, man, y'all are basing your channel around one freaking stock. Like, one freaking stock y'all are basing your channel around. And I was always against that. I was never telling, like, I covered GameStop. But again, I've said this story a million times, but GameStop was making its big run. Once GameStop hit like 550s, I started to get nervous, and I ended up selling my position. And I remember I had thousands and thousands of people watching my channel. I ended up selling my position when GameStop hit like $500 or something. I can't remember what it was. It was something like that. I remember selling my position, and my whole stream just freaking turned on me, right? Like, my whole stream turned on me. Like, I went from everybody's like, yeah, yeah, until so many people were like, this dude's not a real supporter of the movement. He sold. And I remember sitting there being like, bro, I'm never going to hold this forever. And anybody telling you to hold this forever does not have your best interest at heart. Like, at a certain point, this thing has to come back down. And then GameStop ended up coming back down. It ended up dropping from like 500 down to like $100. And then crickets, silence, you know. So, like, in the end, me exiting where I did was the right move. I never got that high again. Still not over that level. Post-split, it's still not over those prices. But it really goes to show you that, like, people don't care about you. Like, people don't care. People don't have your best interest at heart. You're the only person that has your best interest genuinely at heart. Everybody else, especially in movements like that, they're just trying to keep you strung along. Again, the only people really pressuring you not to sell or pressuring you not to speak negatively or not to bring up truthful, constructive criticism are people who are trying to talk you into holding a super depreciating asset. And this is the most common in penny stocks, right? Like, people will push you, hey, this penny stock is the game changer. It's the future of technology. It's the future of the world. ABC penny stock is going to be the future. I've had so many people tell me that their penny stock is different. They almost always go to zero, get delisted, go to pink sheets, whatever happens to them, go bankrupt. That happens almost every single time. And they're so confident about how their one penny stock is different. But most of the time, they're getting talked into this stuff too, right? Like, investing in penny stocks is one of the worst markets you could ever invest money in. If you want to know what genuinely works in finance, you follow big money. One thing, you know what big money never freaking does? It never invests in penny stocks. Why? Because you could buy 10 random penny stocks, you're probably going to lose everything. You buy 10 random blue chips, you're probably going to be up in 10 years. You buy 10 random penny stocks, you're probably going to be bankrupt in 10 years. You know, so just don't be dumb. Husband lost thousands on AMC. A lot of people did, to be honest. And again, it comes from those people telling you never to sell, right? Like, I covered those movements. I made my money on that stuff. Again, I've showed people this before, but I have a Facebook message from my mom when Dogecoin was like taking off and getting really big. Where's Doge at now? Doge is at 20 cents right now. So I remember telling people my mom wanted to buy Dogecoin when it was at like 70 cents. And she sent me a message, and because she knows I like work in finance, and she sends me a message and she's like, hey, should I buy Dogecoin right now? I hear about it. She's like, hey, I hear about it on the news, John. And I still have this message. I can show it to you. If you look, I say, Mom, don't buy it. It has no fundamentals. And it's probably going to go down. It's way too extended. You know, basically, like, if you're hearing about it outside of finance, it's too late. And so I have that message from her. And then, of course, since then, Dogecoin has fallen from crazy extended levels. It was at like 60 cents. I think she wanted to buy it, or 75 cents or wherever. I don't even remember where it was. But I told her no, basically. And, you know, I could still look at that message and see I saved my mom from losing boatloads of money. Because she would have lost big if she would have invested in it where it was. Yeah, look, it might keep going up. I mean, long term, it might not freaking matter. But again, you got to think about the price. She wanted to enter it. It was 75% higher than where it's at now, or something like that. So that's what you got to understand, is that, like, she wanted to enter that thing when it was super high. John, top 3 cutest beers of all time. Why? Why do you keep posting that? That's strange, bro. That's strange. All right, guys. Hey, so we got jobless claims, unemployment filings. They're out. So yeah, we got unemployment filings out. Still got 30 minutes left. All right, chat. Yeah. So we're gonna be day trading live at the opening bell. Where's gold at? So gold's still down. So we got the support level that's been holding. You can kind of see it at 317s. We're up a little bit today. Yeah, we're about $60 today. Doing pretty good this week. That's better, Dunk. I appreciate it, bro. Thank you. You know, worst beard of all time ever in the world. Yeah, I think investing in meme coins is dumb. It really is. It's dumb, right? But there's a difference between investing and trading, right? Like, okay, so let me explain this market to you guys for people that might not understand it and they might think it's total nonsense, because it's not necessarily, right? Most of them are going to fail and they're going to go to zero, right? And anybody sticking big sums of money in these, like, bro, you're playing with fire. It's like picking up pennies in front of the train track. Like, it's stupid. But you can make money doing it. You can also lose your life savings doing it as well. The game that you play trading meme stocks, or meme coins is what I should say. The game you play trading meme coins, is an information game. Okay, so the people that make money doing it, they get information faster than others. So it's a game of who can get information the quickest. They use all these different sites that track meme coin volume. They figure out what meme coins are getting big pushes, what meme coins have big volume surges, and they find this information, they find this info early relative to everybody else, and they front load into it. They say, okay, the X ABC meme coin is getting, 100, 200% daily average volume, and they jump in early, and they get in and out fast, right? Those people can make millions of dollars doing it, but again, it's a game of information. It's not, ooh, Bill on social media said I should buy, cat coin, And so let me just go buy cat coin. That's not what it is. It's a game of information. It's people who get information much, much earlier than everybody else, and they have their sources of information. They say, hey, I can get this information here. I'm on this subscription. They're signing up for all these different subscription services that track meme coin activity, and then they figure out what the ideal conditions for a squeeze are in these coins. They front load early, and then they get out on the pump, right? Again, it's kind of like picking up pennies in front of a train track, and you can lose your life savings doing it. But I also shame the people that lose money in these things. Like, bro, you're gonna cry because you invested money in Hawk Tua coin? Like, bro, play stupid games, get stupid prizes. Like, of course you're gonna lose money doing that. Like, that's dumb. Like, they know. The problem is that they know, right? Like, they're trying to do the same game. They're trying to front load, get into these meme coins early. None of the people putting money into these things truly think they're going to be long-term success. But the ones that lose big, they end up going to the media and they're like, oh, guys, I lost all this money. It's like, yeah, but you were investing in meme coins, you freaking dummy. Like, of course you did. Like, That's like sticking my foot in front of a car and then crying because my foot hurts. Like, of course it does. Yeah, it's a game of hot potato. That's exactly what it is. But with that said, it can be profitable. It could also lose you your life savings. And so it's not a game I play. I'm good on that. But is my mic lower than usual? Is it really? All right, my bad, guys. Let me put this thing in. Might be time to fix my mic. Mic check 1 2 1 2. Let me make sure this mic actually. Okay, yeah, we're working here. I can raise the volume of it if it helps. Here. Mic check 1 2 1 2. Let me know if this is better. Is this better now? Let me know if this is a little bit better. I'm raising the mic volume. Is that better? Is that louder? Is this louder now or not as loud? Tech check 1 2 1 2. It might be worse now. Yeah, we can hear you. Okay, good. All right. Yeah, so we bumped it up a little bit. It should be somewhat better. Yeah, sorry. It's my mic. I'll have to fix it. Can y'all hear music? Can y'all hear the music, guys? I've been playing music this whole time. I was hoping you guys could hear it, but it's all good. Yeah, tomorrow, man, we got a whole gang of stuff going on. We got Jerome Powell. Let me see if they updated it, dude. Every time I'm trying to find... Where is he? There he is. All right, guys. Now it's perfect. Okay, there we go. I trade a little bit of everything. I trade stocks. Yeah, we got Powell tomorrow. I don't know how much his speech is going to really impact things, but as always, we're going to cover it. Powell is supposed to do some opening remarks for the Chicago Booth School of Business tomorrow. He's supposed to talk about the economy. We'll see what he says. The big report tomorrow, though, is payrolls. We got payrolls and unemployment data tomorrow, so that's pretty big. Market's still breaking down, though, looking weak. Testing lows. So jobless claims unemployment filings, or how many people are filing for unemployment week to week, it came in lower than expected, signaling a stronger labor market than expected is what happened. So, yeah, that's what happened. Stronger labor market than expected. Market's kind of flat, though, since this release. Like, we originally went up, and now we're back down, testing lows of the day. So... So the difference between jobless claims and unemployment rate is unemployment rate. So jobless claims is a weekly filing. So unemployment rate tomorrow is for February, the month. And so while jobless claims is a weekly unemployment filings report, tomorrow's is a monthly report for February. We got wholesale inventories today at 10.2. I don't think it's going to move much, but we got something going on. Did the rate cut expectations change at all? No, still a 93% likelihood of a pause. Again, the trade balance data showed up super negative, which means that we are importing much more than we're exporting. Basically, like, we need other countries' goods much more than they need our goods. We're at minus 131.4 billion for trade balance data, which means that we're importing 131 billion worth of other countries' goods. Mostly China, you know, because they have a big, deep manufacturing hub, you know. So, yeah, 0 day to expiry calls. I mean, that's just a straight up gamble. All right, so look, we're bouncing here. Yeah, so Canada's trade balance data, yeah, I saw that. They came into 4 billion. So look, so Canada's, we can see Canada's here as well. Canada showed up at 3.97 billion trade balance, which means that they are exporting much more than they're importing. Still pretty minor compared to US. Kind of shows you the difference between them and us in terms of the numbers there. Ours came in at minus 131 billion. Theirs came in at 4 billion. Yeah, sorry. Yeah, I always have to mute pawn because I hear the Discord notifications showing up. Again, y'all join our Discord, though. It's completely free. It doesn't cost a freaking penny. Alright, so we are bouncing back some here. Hitting some resistance. Yeah, what I noticed is that like GPT and other AI are the most laggy right when I first start the stream. So at like 6 a.m. Eastern time, 7 a.m. Eastern time. I mean, it's the most laggy. Once we get later in the day, it's better. But maybe not, actually. It's still kind of laggy here. Yeah, there's our Discord right there. Here, I'll put the link up for our Discord right here if you want to check it out. It doesn't cost anything. It's completely free. There's the Discord link right there. I don't think that one works, so I'll remove that one. But the one I just posted works better, I think. AI growth, yeah. It's significant. I hope to hold continuing resolution vote on Tuesday. It worked. Oh, well, the new one worked for sure. Bro. Dude, GPT freezes up so freaking much, man. Like, I have to refresh it just to get it to work. It, like, literally freezes there. All right, there we go. All right, so again, we're going to do another x.com post. Yeah, so again, Marvel Tech dumping markets down. So again, we got another post here on X updating All right, so we got another post on X updating with the new jobless claims numbers here. Again, jobless claims did show stronger labor market, and the market's bouncing back. It's still kind of flat, though. Do you think Bitcoin holds? Where's Bitcoin at right now? How did it react to crypto? What the heck? Oh. There it is. So Bitcoin dipping a little bit today, back down to under 90. How do you feel about the markets, John? Well, I'm kind of in this mixed spot where I don't know. I don't know if I want to wait and start DCAing later on after we get more confirmation and a rebound, or whether I want to start right now. So I'm just kind of in a waiting period of time. I'll probably start to DCA soon, but I'm going to wait to see if we get more weakness first. I'd honestly like us to drop a little bit more. If we drop a little bit more, then I'm a little bit more interested in DCAing. But so for now, I'm just waiting. Market Watch is updated. If you use their economic calendar, call me Sam. Yeah, I mean, if you look at Market Watch, it's pretty simple. It's right here. Look, here's Market Watch. 221. Here's 235. I mean, I use a bunch of different sources. I don't really like telling people my sources because you got too many like competing YouTubers and stuff like that want to like steal it, basically. But Market Watch updated. DCAing is dollar cost averaging, and what I mean by that is in investing terms. So DCAing is when you take periodic buys, regardless of price, in specific intervals of time. Meaning, like, once a month I add 300 shares of Apple, or once a month I add 50 shares of the SPY, or 50 shares of the QQQ, or whatever it is, right? But every month, regardless of price, I do it. It's called dollar cost averaging. It's slowly adding over time, regardless of price, in specific time intervals. No, I don't have Bloomberg Terminal. It's like $20K a year. I could probably write it off, though, but no, I don't have it. Yeah, I mean, I'm just going to wait. Like, I don't mind DCing on a big pullback. It just depends. And when I say DCA, I mean I'm holding long term. So like I might be wrong, and the market might keep dropping down. And again, I'm not DCAing yet either. Like I'm waiting, to be honest. But if I do start to add, it's going to be long-term positions here. I think people day trading and all that stuff, they have too short of time frames for this type of thing, right? Like I day trade every day. But if I'm investing for long term, it's long term investing. Like I gotta sit on it long term for a decade if I need to, and if you do that, super probable to make money. Like the biggest statistical edge in finance is long term investing. And again, I do this calculation at least once a month usually on stream. I'll do it again today. If you put $400,000 into the S&P 500 or the NASDAQ, right, you're gonna earn about 10% a year. Doing it on average. Statistically, over the last 100 years, you'll earn about 8 to 10% a year. We'll call it 10 just to point proving purposes. Now, let's say you take $400K, you invest in the S&P 500. You take $400K, you invest in the S&P 500. Within 20 years, let's take a look at what this will turn into within 20 years on average. And again, that 10%, 8%, 10% number includes crash statistics, which means that on good years, like the last 2 years, you're going to go up much more than 10% to compensate for the bad bear markets that we get. And so, again, the average, including crash statistics, is 10. Now, again, in 20 years, that 400K is going to turn into 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That $400,000 is going to turn into almost $3 million in 20 years investing into the S&P 500 with compounding. The compounding effects of 400K into the S&P 500 or the NASDAQ is super profound. You're going to turn that 400K into about $3 million, $2.7 million in about 20 years. You wait 30 years, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's going to be about $7 million. And so you got to think about the compounding effect of this. This is why you DCA into stuff, right? This is why investing beats everything else, right? I still day trade. Day trading is great. Investing is the biggest statistical edge the market ever gives you. And so is why I always tell people, like, look, you could be bearish. You can say the sky is falling. The market could correct. And again, I called this correction. I predicted this correction accurately. But again, if we keep correcting, I'm going to start buying. And I might sit on it and I might be wrong for years until I'm right? Like I might be wrong for the next 1, 2, 3 years. And that's okay. Because if I DCA into it, it won't freaking matter. And over a 10, 20, 30-year period, you make life-changing sums of money from it. And that's what a lot of people miss out on. Everybody's trying to predict the top. The reason people use money managers is because if you try to do it yourself, let's take Steve, average retail investor, right? Steve has a really good year. Steve might invest in a stock and make 60%, 50%. He's going to get excited. What's Steve going to do? Steve's going to sell. And by selling, you're missing out on the biggest statistical edge, right? Like, unless you're doing it like me, like I sold because I thought a correction was looming, and I'm going to start buying into pullbacks. But I still have some stocks anyway, so it doesn't freaking matter. But in theory, you're supposed to buy stocks and never sell. You're supposed to buy stocks and never sell. And if you do that, you buy the right stocks, it'll build generational wealth, right? But again, I'm not an investment professional. I'm not liable if you lose. I have no freaking idea what I'm talking about. I might be wildly wrong about anything and everything I'm saying. Don't copy me. Not an investment professional. Understand CFTC 4.41. Hypothetical or simulated performance have limitations, guys. We're going to get ready to day trade at the opening bell. But yeah. Is my mic too loud, guys? We got one person saying it's too loud, but he might just be... Is it too loud? I can turn it down. Somebody told me it was too low. Now it's too loud. I turn it down a little bit. Is that better? Is this better? Turn it down. Your mic is good? Okay. Yeah, just turn me down a little bit if it's too loud. So I see somebody saying that this doesn't take into account inflation. You're right, but the whole reason you do this is to hedge against inflation. If you don't invest in something, you're losing money to inflation over time. But let's say inflation averages 3% a year, right? You're making 10. And so you're still going to beat inflation, depending on what you buy. Right? And this is why you invest, because if you don't invest in something, you're going to lose it to inflation. Like prices go up over time. It's inevitable. But again, if inflation averages 3%, 2.5%, you're still going to make boatloads of money doing this, you know. Again, I'm not telling you what to do. There's always a chance this doesn't happen. It's a pretty low freaking chance, but there's always a chance. And again, I have no idea what I'm talking about. Don't copy me. But the point is, you're still going to beat inflation most of the time. We are all Steve. Steve's the top 3 greatest ever. But again, the reason people end up like this is what happens. People should be holding for years and years and years. They end up selling and not getting in anything because everybody's telling them the market's going to crash. You know, so crashes and corrections are wildly overpredicted. And this is coming from somebody that accurately predicted this correction that we're in right freaking now. I told you guys in December I stopped buying. Why? I thought this was about to happen. But again, if you've watched my stream for years, anybody that's been around long enough understands that like I'm usually pretty critical of correction and crash predictors because they're always freaking wrong. You know, they're always freaking wrong, and it discourages people from taking advantage of the true edge in markets, which is long-term investing. You know, and again, it just turns out I was correct about this last correction, but I still think the biggest edge is on the upside. And I think this crash or correction is not going to mean anything in 10 years. For the most likely. You never know, but it's probably not going to mean anything in 10 years. And so with that said, like in theory, you should be buying and sitting long term and not touching it. You know, the biggest mistake people make is, again, they end up being up big on a trade. Like they get in and they're up 60, 70% on a trade, and they don't invest long term. But if they make a big gain, they cut it and then they sit on it, and then they're so afraid of losing it, they just don't do anything. Like compound interest, it's one of the big ways the rich get rich. It's compound interest. And that's basically what I just showed you is a compound interest calculation. Like, again, you can look at bonds in the same way, although bonds is less compounding. But some of them compound. You can take the money you make and add it, buy more bonds with it. Let's say you get an average about 4% in bonds, you know. And let's say you buy yearly bonds, and let's say you make 3%. And let's say you got 500K, you're still going to make a lot from it. First year, second year, third year, fourth year, fifth. Whoa. Hold on. Let's say you take 500K times 1.03 for a 3% gain. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. In 10 years, you're still going to make 170K in bonds. It's not going to be as much, and it's more so going to compete with inflation. And so if you want a surefire way to keep up with inflation, bonds are guaranteed returns. You know, you're basically loaning the U.S. government money, and they're paying you a specific yield interest rate. Usually it's around 3 to 5% right now. When I look at the 10-year yield, that's actually what I'm tracking is how much bonds pay out. And here's the 10-year yield. It's currently at 4.3%. Yeah, I hear some people talking about T-bill. If you want a way to do this in your stock account, look at T-bill right here. T-bill is a treasury bond ETF. So it'll pay you basically what short-term treasury bonds are paying you, and they'll pay you in dividend payments deposited in your account every single month. So if bond yields are currently paying out 5%, you would let's say you invest 50K into this. Right, let's say you invest 50K and bond yields are paying out let me think. Here, sorry. I usually can do this calculation. For whatever reason, I feel like kind of slow today. Maybe it's the coffee. Anyways, so let's say you invest 50K and you're earning 5% annualized divided by 12, so it's about 0.416%. If you invest 50,000, here it is, into it, you're going to earn about I don't know why I'm having a hard time with this calculation. All right, times 0.041% is what the calculation would be. All right, here, let me just do it this way. So you're earning 5%. You're going to earn I can usually get these guys. I ask anybody that watches the stream. For whatever reason, I'm just drawing a blank. You ever have days where you just feel freaking slow? I'm not sure why I feel so slow today. Anyways, the point is, it'll pay you about 5% annualized, which divided by 12, it'll pay you about 0.41% annualized. So if you got 50K invested into it monthly, it's going to pay you about it's going to pay you about 200. What is it? Yeah, I don't know why I'm drawing a blank right now, chat. I could usually do this pretty well. My nose is kind of stopped up too. Yeah, I'm trying not to look at the chat because I want to figure it out myself because I usually can do this. Anyways, point is, you'll get about 5% annualized. And so here it is. This is the calculation. I take 50K, or let's say 500K, and you divide it by 0.05%, which is about 25 grand of 50K. So if you deposit 500K, you'll make about 25K a year. And then that divided by 12 in interest payments, you make about 12.5K a month. That can't be right now. Oh, I need to divide it by 12. See, this is why I'm running slow. 500K times 0.05%, which would be 5%, which would be 25K divided by 12 is the annualized number, which is about $2,083 a month. See, this is what the number. So you'll make about $2,000 in interest payments if you have 500K in T-bills monthly. You'd make about $2,000 in interest payments, $2,100. See, that's the calculation. I don't know why it was so hard for me to freaking do this. Usually I know this. Yeah, brain fog is what it is. For whatever reason, I feel slow right now. It's strange. Anyways, guys, hey, we got 5 minutes until the opening bell. 5 minutes. Oh, well, yeah, there's fees, there's taxes. Like, there's a lot of stuff on top of that for sure. How could the jobless claims come in lower with all the layoffs? Well, I mean, what layoffs, though? You know? I mean, there's a weekly unemployment filing. Like, we're not going to be able to look at it deep, you know? Yeah, I was having a hard time thinking of the calculation for percentages. Usually the one I do it is like this, right? Where I say, let's say you invest 20K. So it's usually smaller numbers. I remember I had 70K in T-bills last year. And I remember I made like $283 a month from my 70K invested in T-bill. And it went, the calculation went something like this. What is 5% of 70K, which is what I got invested in it? 0.05%. It would be about $3,500 a year. And then annualized, or to put it into monthly payments, it would be like this, right? So yeah, about $291. I remember I got like $280 something after fees. And so about $300 I would make in interest payments from Treasury bond, T-bill, ETF. And so that's the usual one I'm doing. I think I just used a bigger number. So whenever I saw $2,100 a month, I thought it was wrong. And so I ended up redoing it is what happened. It's just under 140 Costco hot dogs. Yeah. Yeah, and the best part about these is that you can liquidate them anytime, right? Where a T-bill locks you in. I mean, I guess you could always sell it in one way or another, but you could liquidate this whatever you freaking want, and that's good. And that's why it's useful. And so, you know. This is a double top. Yeah, we're kind of in this really sideways neutral range here. We got 3 minutes left, chat. 3 minutes. Yeah, y'all be careful. All right, guys. Broadcom is still down pretty big. Look at AVGO. It's been on a big downward fall here, man. Look at it dropping today. That was down to under 182. So it's at 181s right now. I'm usually pretty good at math, though. Like, I like math. Like, I was always good at math. Like, it's very logical. Like, I like math because it's logical. And I can use logical, you know, interpretations to figure out stuff. But, yeah, and usually I do this every day. Like, I've done this probably once a month for the last few years, showing these type of calculations and stuff. But for whatever reason, I'm just feeling slow this morning. I don't know why it is. All right, guys. We're at 23.17s. Yeah, market opens up in about 1 minute, 1.5 minutes here. All right, here we go. Market's testing lows right before the opening bell. We got 1 minute left, chat. Oh, I eat blueberries, bro. I eat blueberries. I eat a lot of Brussels sprouts. Need to get some omegas in here. All right, guys, we got less than a minute. All right, 30 seconds, chat. 30 seconds. Yeah, I like the Halo tangerines too. All right, chat. 15 seconds, 10 seconds, really. All right, we're cracking lows right before the opening bell too. It looks like we might pop this right at the open. Who knows though? We got some support levels here. All right, here we go. Here's the open. 5, 4, 3, 2, 1, and there's the bell. Market flush down, crack lows right at the opening bell, like I said it would. Big breakdown at the opening bell. Look at this drop. Now this drop is usually stemming from right now. We got like Nvidia, I think, dipping down a little bit here, but it's not really Nvidia dragging the market down though. Tesla's down. Meta's down. Google's up. Broadcom's down. Apple's down. Look at this drop at the opening bell, guys. Wow. All right, so we did dip here. Google's bouncing back. Broadcom's down though. Tesla's down. Microsoft's breaking down. It's at 395s. All right, guys. So market's still flushing down. All right, so we're up. Microsoft's up.
I'm waiting here. I gotta wait at least a couple minutes after the opening bell to take some positions here, so I'm gonna wait. It looks really red for me. I might buy this support level here, but there's a chance it just dumps down. Yeah. Watching Nvidia. Nvidia's not really looking too weak here. Microsoft's pumping up. Apple's up too. I'm going to buy this. It's kind of risky, but hey. All right, we just made a little bit here. Very small little scalp. I think I could have held longer too, but it's pretty close to the opening bell. 3 minutes in. I don't want to take too much risk here. Yeah, MRVL had earnings. They definitely caused the market to dip some. It's back down to 72s right now. He said Nvidia doesn't look weak. I'm talking about right after the opening bell, Fob. So, like, I'm talking about Nvidia doesn't look weak in the last 4 minutes. Nvidia opened up super down, of course. It's already down to 113. It's gapping down a huge amount. But again, like, context is important. Like, I'm covering the opening bell right now, so when I say Nvidia doesn't look weak, I'm talking about the movement that it's made since the opening bell, which, again, looking at it, it's starting to rebound back up. It's at 113s. You know. Hey, what's up, Tiny? Hope you're doing good. Yeah, look at Google. Google's up big. So is Microsoft here. So now we're turning all the way back down. Nvidia's starting to turn too. Yeah, all good. Little chop, but Netflix has fallen down to 950s. Tesla is down to 260s. Microsoft started to pull back a little bit, and Apple's kind of neutral. Meta is testing the volume-weighted average price. So this kind of looks weak, to be honest. Could be choppy day because of payroll datas. All right, so I'm going to short this real quick. All right, we took half off. Took another little scalp there, too. So far, so good, man. We're up almost 100 on the day. Attacking very short-term positions right now. All right, so here's that weakness show up. Nvidia just cracked lows. It's at 112.40s. See if it's a liquidity grab. A lot of stuff just turned. Tesla down, Netflix down, Meta down, Marvel down, Apple up, Microsoft up. And this is all since the opening bell, though, so a little bit of a mixed movement. Bad GDP news would make everybody cry. Last down quarter for GDP was just 1% down. Yeah, I mean, GDP is still at 2.3%. Payroll data tomorrow is going to be the more important metric, I think. Unemployment's important, but payroll's more important right now. I'm short here. I'm gonna cut this. I just don't like it. We lost $11. I could have held it too. Look at that retracement. But I think, again, Apple's ripping up. Apple went technically green on the day now. So Apple's been moving up. And Apple's the most heavily weighted stock in finance. So, yeah. That's why I cut it. Yeah, sometimes the first move is the wrong move. Look at that level hold too. I wanted to buy that dip. I could have. We got a little cushion to take now, so we're going to start taking 2 contract micro positions, see if we can take a little bit more. Nvidia's still looking weaker here, but it can always turn. I'm going to short this and then maybe take 4 contracts here. There we go. All right, just made another $30 there. Yeah, we're up over 100 now. I'm going to short this and take a longer term trade. I'll try at 1 contract here, but it's risky. We'll look to see if this resistance holds. I'm going to take half off there just because it's safer to exit, but I did get a bad fill. Let's see if we get green now, but a little harder. Just kind of ripping up. See, the problem is Nvidia looking strong. So we ended up getting out. We only lost $15 on that string of trades, and I think if we would have held into this resistance, we would have made more. I'm a little bit indecisive right now. I think like Meta's sideways, Google's up big, Apple's up, you know. And when I say up, I mean after the opening bell. Tesla's down deep since the opening bell. Netflix is down pretty deep since the opening bell. Microsoft is up since the open. Still red on the day, though. And so Nvidia is kind of sideways over the last 2 or 3 minutes. So I'm just kind of sitting tight waiting. You know, tomorrow we do have payroll data too, so that might... I'm actually going to short this again. And the reason I'm shorting is because... hold on. No, that was the wrong move, so we ended up losing there too. See, I think we're getting wicked out a little bit too much. I got to take longer term trades. 2 contracts now. We took half off. We added a little bit more to it too. There we go. Took a little bit more off. There we go. So we just made it all back, plus a little bit, to be honest. We made about $33. So we lost 31. So, ooh, there's the drop. See, I should have held a little bit longer. I think if I have anything I need to work on is holding my positions a little bit longer. Apple just went a little red on the day. Technically, it was over the previous closing price. It just went red. A lot of stuff just turned. Want to make sure we don't have any catalysts coming out. Okay, so Lagarde is speaking. Okay. Lagarde says today's decision was a consensus and nobody opposed it. ECB's Holdman abstained, however. Lagarde says if data indicates that a rate cut is appropriate, the ECB will cut. If the data indicates a pause, it will pause. The U.S. has reportedly offered a ceasefire in exchange for release of ECB. Lagarde says inflation will reach target in early 2026. That delay is due to energy prices. ECB President Lagarde says quantitative tightening process has been very smooth. Lagarde does not see QT as a primary component. She says policy discussions were lively and intense. So yeah, so we're still up about $100 on the day. We got a nice little cushion, but we're kind of chopping back and forth. Nvidia's fighting back. Apple's bouncing back a little bit. Meta's basically flat. Google's green still since the open. A lot of stuff's red though. Tesla's like really red. Yeah, so these lines are on my chart are holding nice. A lot of what happens now depends on what, like, I'm gonna buy this actually. Small size, and we might add to it down to the support level, and then if we break underneath it, just cut it. All right, so there's 2 contracts. I don't like that, so I'm gonna cut half off there. See what we do on the rest. Yeah, we stuck to our trade. We just lost. We're still green on the day, but I might just sit on the greens for this one, because this is the one I made the $1,000 on yesterday, and then we're just gonna make sure it's the right one. Yeah, we'll trade a little bit larger on this account. I just don't want to give it all back. We're green on the day, 2 days in a row. I'll sit on that green streak and celebrate. See, we're right at this low level though, and the market's very choppy too. All right, so I'm going to take 2 contracts here, and we're going to add maybe up to 4, but it's a risky position. I just think the market with payrolls tomorrow could maintain a choppy trend, but I got to be careful here, which it looks like I do. I'm going to get out half and then maybe try to strategically add some more if we get it. Just be careful though, guys. Don't copy me. This account I'm down on, the one I'm in now, so I can be a little bit more loose with it. I'm trying to buy at the bottom of the range, and we'll see if we get green and add some size back. But the problem is Nvidia has kind of turned, so I think I got to cut this. Look at Nvidia come back down. I'm going to slow down my trading for sure now, though, just because, like, yeah, it's a little risky. And I think we could have made money on that one, too. We got 3 funded accounts. We got another one that we haven't activated here. Wait. Let me make sure it's the right one. Okay, yeah, we haven't traded on this one yet. There's the bounce. See, I'm right about the direction on some of these, too, unfortunately. Yeah, the market's fallen down a little bit, fading, so let's see if it comes back. There we go. Okay, so we actually just made us a good bit of money on this other account too. When my trading gets tough, sometimes I will trade off stream because, like, to be honest, I don't even claim to be a good trader sometimes. And sometimes I just need to. But we did have a nice string of trades, so we're green on every account that we have today. Here's one of the other accounts that we're on. You can kind of see we ended up making 1250, 34, 65, 33, 150. So we're up. Let me see what we're up on this thing now. Yeah, we're actually green on the day. So we got ourselves back to green. See what we do on the rest. Yeah, it's very choppy, so I'm kind of attacking choppiness. And again, like I talked about this thesis earlier. Tomorrow we have payrolls, right? So tomorrow we have payrolls, and so what does the market fear? Payrolls. And so what does the market do when it fears something or traders are apprehensive? It ranges. Not a shock. And so what I've been doing is essentially buying the bottom of this range and then selling on these little pops. It works. I can't guarantee it's always going to work. Not an investment professional, but it worked today. That's good. You can't trade penny stocks on Top Step. Top Step is just for futures. So I can day trade the S&P, the NASDAQ, the Dow, the Russell, gold, some currencies. Patterns are very similar to blue chip stocks. But you're day trading indices, basically indexes. And so I can day trade like the QQQ price action, the NASDAQ price action, the S&P price action. And there's no PDT rule. And the patterns are very similar. Like this is the QQQ price action. If I put the QQQ up next to this, it would look the same. Patterns are very similar to blue chip stock patterns. Most pro day traders should be trading futures as well. Most Forex traders, I think, should too. No PDT in futures. You can day trade the S&P, the NASDAQ, the Dow, the Russell, gold. And again, most day traders lose. And so if you try to put up 5, 10, 20, 30 grand yourself, let's be real, you're probably going to lose it. That's why Top Step's useful, because there's no PDT rule. You can get started for cheap. It's kind of like a souped up demo account. They give you a 50K demo if you can make 3K in profit with it without losing 2K. Following their rules, they fund you between 50K up to 150K with a 90% split. And you get to keep your first 10K in profit. And if you fail, you're out $50. It's the best of both worlds. They've paid out almost $200 million. And again, this risk system that I have where I build up a small cushion first, and then I use that cushion to kind of slowly increase size. Like I built up a $50 cushion. I can take a couple more micro contracts. And on Top Step X, there's zero commission. And so there's tiny amount of fees per contract and zero commission. So I can start small, make $50, take a little bit larger size, make $150, take even bigger size. And then that's where I'm making $300-$400. And then I'm increasing size much more, and I can take larger risks. Because even if I fail after that, I'm back to break even. It's not the end of the world. Instead of having some massive drawdown in the account, I'm kind of back to break even. And that's the way, I think. And again, if you want to try this out, they're an affiliate of mine. So, of course, I'm biased. I always tell people, definitely biased in their favor for sure. If you want to check them out, though, here's the link. I get paid by them. So, again, I'm biased. If you want to check out link, understand CFTC 4.41. Hypothetical or simulated performance have limitations, guys. Hey, my baby girl. You just my baby girl. Bruce, out of here, bro. Hey, Bruce, out of here, dude. Bruce is too crazy. Rosie, come here. Oh, she left. My baby girl, Rosie. Yeah, micros are super important. Look, so there's that big rangy bounce that we expected. Where's Palantir? The link should work. Yeah, I don't know. If it doesn't work for you, I don't know what you're doing. But link should work. All right, so look at that support hold here. We broke over that level, 317s. All right, we got payroll data tomorrow, guys. Big report. Uh, yeah, I don't think we have any economic reports coming out at 10 today, do we? Yeah, so we wholesale inventory is expected at 0.5%. I don't think this is a big thing. We got ECB Lagarde speaking right now too, though. So the Canadian Prime Minister says they are continuing to talk to the U.S. administration. The goal is to get tariffs lifted. So the ECB press conference is going on like right now, I think. Yeah, we got like nothing really. Wholesale inventory is expected at 0.5 to 0.7%. I don't know how much those are really going to move things. Again, we're rangy. Like I said, we would be today, I thought. So. Sasaki splitter, bro. That thing is a beast, man. More Trump real. Yeah. Bitcoin, is it going down right now? Let me see. Is Bitcoin falling still? It's at 90,000. Bro, I've always been a podcast like finance channel that covers the market open and big economic reports and events. That's what we've always done for the last couple of years. Yeah, I've kind of slowed down my trading here. I'm green on the day, but we're so choppy, I'm just not really confident in either direction. I think we might come down some here to 2075, but I might be wildly wrong. Do not copy me. And there's a dip. Let's see if it holds down there. There it goes. There it goes. There it goes. See if it holds. This is a triple bottom right here, though, so this might cause it to pop. Here he goes. There's 2075s, 2080s. There it is right there. Pop. 2075s. Man, this is big red action coming through, though. It went down to 2070. It's close enough. Should have taken the short, huh? Like 2070. I was pretty close. Here's my level. We went down a little bit more than that, but that's okay. Market's getting some red. Again, choppy range, you know. Y'all be careful. Tomorrow's a big day. Yeah, my hands are kind of off right now. I mean, my levels have been honestly pretty accurate. I haven't drawn any new levels today. I think I've kind of edged out a little bit, a couple of them, but I've kind of edited a little bit of them. I mean, but I haven't really drawn any new ones. These levels from yesterday are still working pretty well, confirming off of it. So yeah. Look, guys, I'm probably just gonna shut it down. Payrolls tomorrow. Choppy, indecisive, apprehensive investors and traders. I think I'm just gonna wait. Hey, I love you all. Y'all have a great day. Again, check out Top Step if you want to help support your boy here. Hit the subscribe button. Tomorrow we got payroll numbers coming in 8:30 Eastern Standard Time. Be here. If you're not watching this channel at 8:30, you're gonna miss out on one of the biggest economic events of the month. It's going to be really telling towards what the Fed does for their rate decision later on this month. CPI inflation next week. Payroll numbers came in low on Wednesday. Y'all be ready in the wake of all the crazy tariff drops and correction markets. We'll see what happens tomorrow, 8:30 Eastern Standard Time. Be there or be square. I'll see you guys later. Y'all be good. I love you all. Y'all have a great day. Remember, guys, I have no freaking idea what I'm talking about. I have no idea. If you copy me, you might lose. I might be wildly wrong about everything I say. I have no idea what I'm talking about. Understand CFTC 4.41. Hypothetical or simulated performance have limitations. We are not investment professionals. I'll see you guys later. Y'all be good. If you want to check out Top Step again, link is